If you are in your 40s right now, the clock is ticking. The average 40-something has less than $100,000 saved for retirement. If you plan to retire at 65, that math simply does not work. But here's the good news. In your 40s, you are in your peak earning years. You have the income, you have the life experience to avoid costly mistakes, and you still have 2 solid decades for compound interest to work in your favor. Today, we will look at exactly how to catch up, overtake the pack, and secure your future. We are breaking down the 5 specific must-have assets you need to start buying right now to build a wealthy retirement. You are the CEO of your own retirement now. By taking active control over these 5 investments, you protect your money from the high risks of inflation and the uncertainty of a government pension. Asset number 1 is the Broad Market Index Fund. When you hear the word investing, you might picture day traders yelling at screens on the New York Stock Exchange floor, trying to guess which stock will soar tomorrow. That is gambling, and you do not have time to gamble with your retirement money. Think of the stock market like a giant grocery store. Buying one individual stock is like betting your life savings on a single brand of cereal. If that company goes bankrupt, your money is gone. An index fund is like buying a tiny piece of every aisle in the entire store all at once. Specifically, an S&P 500 index fund bundles the 500 largest, most profitable companies in the United States into one single basket. You instantly own a small slice of leading tech companies, healthcare giants, and major banks simultaneously. The legendary investor John Bogle, pictured here, had a simple rule for this. Don't look for the needle in the haystack. Just buy the haystack. Historically, the stock market has returned an average of about 10% a year. By buying the haystack, you capture that growth automatically. You simply buy this single asset consistently every month, whether the market is up or down. Letting compound interest work on this foundation is how you build the wealth required to actually retire in your 60s. Asset number 2 is the Dividend Growth ETF. We just built your growth engine. Now we need a way to live off it. A dividend is simply a slice of a company's profit paid directly to you in cash, just for owning their stock. In your 20s, you mostly care about a stock's price going up, but in your 40s, cash flow becomes just as important. Imagine planting an apple tree. The index fund is the tree growing strong. The dividend fund lets you eat the apples without chopping it down. You automatically reinvest those dividends to buy more shares, creating a snowball effect that builds size and speed. By the time you reach retirement age, the goal is for that snowball to provide enough monthly income to cover your living expenses. You get to live off the fruit, and you never have to sell your underlying investments. Asset number 3 is a real estate investment trust, or REIT. Real estate is excellent for protecting against inflation, but in your 40s, you are busy. A REIT gives you the financial benefits of real estate without the time-consuming headaches of being a physical landlord. REITs allow you to own a piece of commercial properties, like the vast data centers full of server racks that power the internet. This also includes healthcare facilities, like this modern hospital building. By law, these trusts are required to pay out at least 90% of their taxable income to their shareholders, which means you get a direct share of the rent these properties collect. You do not have to fix a single toilet or negotiate a lease. It trades right on your phone just like a stock. Adding REITs diversifies your wealth, anchoring your retirement securely in physical infrastructure. Asset number 4 is the Health Savings Account, or HSA. Most people see their health insurance as an expense, not an investment. That is a mistake. Healthcare is the number 1 cost that bankrupts retirees, and an HSA is a powerful shield against those medical bills. It has a superpower known as the triple tax advantage. First, HSA contributions are tax-deductible. Second, the money grows tax-free. Third, withdrawals for medical expenses are completely tax-free. Most spend this immediately. A better strategy is to pay current bills from checking, leaving the HSA fully invested for the next 20 years. Over time, that account builds into a dedicated medical war chest. By the time you are 65, you have a substantial fund ready to cover prescriptions or surgeries, shielding your other retirement accounts from being drained by medical bills. Asset number 5 is short-term treasury bills or high-yield cash. In your 20s, you had decades to recover from a market crash. In your 40s, the timeline is tighter, so you must prioritize keeping your money safe. You cannot afford to have every dollar you own exposed to the wild swings of the stock market. Right now, you can get a solid return just for holding cash in short-term U.S. Treasury bills. Because they are backed by the government, headquartered in the Treasury building seen here, they are essentially the safest asset on the planet. This provides you with cash you can use immediately, so you do not have to sell your stocks at a loss during an emergency. This also gives you financial ammunition. When stock or real estate prices drop, having a pile of ready cash allows you to swoop in and buy those assets at a significant discount. It is the shock absorber for your wealth. To recap, you need broad market index funds for growth, dividend ETFs for passive cash flow, REITs for physical real estate, an HSA to shield you from medical costs, and secure cash to protect your downside. The single greatest risk right now is doing nothing. Start buying these assets today, even in small amounts, and let time do the heavy lifting. To learn how to free up the money to fund these assets, click the video on your screen right now, and let's take the next step toward a comfortable retirement.